Good afternoon and welcome to the afternoon session on the Wednesday of the third week of the public hearings in the online platforms market inquiry. And today we're dealing with auto platforms, and we've got cars.coza, I'm sure another household name in South Africa. And I've got Ross McElroy and Alistair McMurray, the two founders, with us. So welcome, Ross and Alistair. I'm joined by Ms. Doris Tsepe as the fellow panel member, and then technical team as well that you've probably interacted with.
Yeah, they were very helpful. Thank you. But yeah, just wanted to say hello, James, again, and Doris and the Competition Commission panel. Thanks for having us. And yeah, excited to get started.
Well, as you have a presentation, I've learned now that in this online world, everyone has flashy presentations. So we'll leave you to put that up and take us through it, and then we'll come with some questions.
To be honest, James, we thought the presentation was for your benefit. We didn't do it of our own accord. But needless to say, we do have one. So I'll take you guys through it.
Yeah, and I think it's largely the public that probably benefits the most in this process, hearing about the platforms they use every day.
Yeah, hopefully. So yeah, we'll try and shed a bit of light on some of the sort of intricacies of cars.coza. But as you say, a lot of it should be fairly common knowledge. So just by way of introduction, so my name is Ross McElroy. I am one of the co-founders of cars.coza, and Alistair on my left, Alistair McMurray, is my co-founder and co-CEO of the business. We also have Megan Marinas on the call, who is a consultant to the business, but she plays an active sort of CFO type role. We don't have a CFO in-house. We're still fairly lean. And we've got our legal team led by Burton Phillips on the call. So basically, just by way of introduction to cars.coza, the business. At our core, cars.coza is a online automotive classifieds platform. So we essentially connect car buyers or prospective car buyers with car sellers and help to enable and enhance that transaction. But we don't play an active role in the transaction itself, but more so just the connecting of the transactors. We launched in 2009 as a startup. Your pretty typical startup story out of a garage, and myself and Al and our co-founder at the time. The three of us started this journey, and we saw there was a gap in the market for technology to play a role in the car buying journey. Back then, 2009, your major players were print based, and obviously there were a lot of barriers to entry, and a lot of there were great opportunities in print, but it wasn't our wheelhouse and our expertise, and we came from a technical background, and the market was slowly starting to shift in that direction, and we felt we could enhance the offering that was available to the consumer. It's worth noting that most of the players that were in that sort of print space also had digital offerings, and there were some purely digital players at that time. But we thought, based off our experience and our knowledge, and maybe just the ambitions of youth and naivety that come with that, that we could do it a little bit better. And so we moved into that space. And we started off with one full-time employee, and slowly grew over a period of time, to the business we are today. And that was all organic growth. So we're a bootstrap business. We've never taken on any capital. The initial founders are still the shareholders, and, some of the senior guys within the team that have been through the entire journey with us are still very much involved and active in the business on a day-to-day basis. So, it's a very much an organic growth story for us, and we've kind of grown up in this business and learned a lot about the car market and the automotive industry through it. And I think, just initially, we came at it from a tech angle. And so we really didn't struggle to get consumers onto the platform. I think that was probably one of the strengths we had as consumers were migrating towards technology, and the fact that we were, active in that space just by virtue of being kind of young and kind of looking for new ways of doing things. But the dealer market was a really tricky one for us, and it was very difficult for us to get trust in that space because, they were a little bit tentative around digital as a concept, but they obviously had great relationships with with some of the players that already existed, as well as a familiarity with print. And so, the challenge of getting dealerships on was very real to us, and it kind of, I suppose, informed how we grew our business and the DNA of the business today. So, we would have to go in and really try and prove value. It's a really interesting concept. I mean, if we couldn't convince the dealers that this digital platform, whatever it was able to help them make sales, they just didn't really want anything to do with us, and there were 5 or 6 other players that they were more familiar with. So we led us to kind of run things like test periods with them and to really work on our reporting and in terms of trying to prove value. We also had to have very easy and fluid sort of contracts with the guys because, I mean, long story short, they weren't willing to take a risk on us. And so they would trial things with us, but they wanted to be able to exit if the product wasn't working for them. And that's, it's how we run our business to this day. I mean, all our contracts are month to month. And if we can't, help a consumer or to find a vehicle and or help a dealer to, I suppose, sell their vehicles, we have no other way of keeping that relationship alive. So, as we grew, we interacted with more and more customers, and we realized that there was also space in the user journey for more information and more empowerment. And I guess we were learning about the automotive journey ourselves going through it. And so we started to look at adding ancillary tools which would empower South Africans in their car buying journey. Things like our content, which has become pivotal in terms of helping users to buy vehicles, and various other tools around, finance, insurance, etc., to help them make informed decisions. And obviously this has spilled over into our dealerships, where we're able to inform them and add a lot of, I suppose, clarity and insight into their businesses. So, we keep expanding in that space in terms of empowering, the decision makers in whether that be a consumer or a dealer space. And we've added a lot of tools over the years. Currently, we're 12 years old, give or take, and we still are bootstrapped. We still are independently owned. We haven't taken on any capital, and that's enabled us to keep our culture and our DNA very startup, and we're still essentially a small business and identify as such, although we do have a lot of reach and a lot of influence in the marketplace. We've got about 65,000 vehicles listed on the platform. This is from all across South Africa and over 1,600 different sellers, predominantly dealerships. I mean, our base would be almost exclusively dealerships, although we do have an offering for private sellers. It's pretty insignificant in terms of the scale of our business. We also have just over 50 full-time employees, and myself and Alistair are still operationally involved in the business, as are a lot of the senior guys that have grown up with our business. Yeah, from the consumer or the buyer's perspective, we see the benefit of the platform is that it aggregates vehicles from many dealerships. It enables them to get a much clearer picture of what the landscape is and to compare directly and ultimately to find vehicles that they might have struggled to find in the ecosystem if they didn't have a platform like our own. And we see this as improving customer and consumer choice, as well as empowering the consumer to compare offerings and to kind of make more informed decisions. The platform also allows vehicle sellers to reach a much broader set of consumers and to generate leads that they may not have been able to get, again, left to their own devices. So we're essentially creating a much stronger connection between a wider range of buyers and sellers, and obviously with used cars particularly being a unique item for the most part, enabling a much greater choice for most of our consumers and enabling dealerships to be seen by more consumers as well. But it is worth noting, and I have made this point, but I'll reiterate it, that we don't actually play a part in the transaction. And so once we've connected the buyer and the seller, that transaction is still concluded largely at the dealership or through the private sale channel of their choice. And we don't have great line of sight into that. So we're essentially connecting and then sort of stepping out of the process, although we do have some customer service and support mechanisms for the consumer and the dealer offline. But yeah, we don't have line of sight of those transactions. Yeah, there's a number of other platforms that are similar to us in the space. I know you've interviewed a few of them already. Pardon me, you've got Auto Trader, Carfind, Surf for Cars, that are really sort of key niche competitors to us in the vertical space. And they've all been around for a lot longer than we have, many of them transitioning from sort of a print background. If you look at the horizontal space, Gumtree is very active, OLX, etc., which also have offerings for dealers and private sellers, and kind of the offerings are slightly different being horizontal, but they do play in a similar space. And we've seen a lot of new players arriving on the scene now, with F&B and CarTrack and various other platforms opening marketplaces of their own. So quite a competitive landscape. But I think at its core, we're seeing the sort of major players in the space being, I would say, ourselves, Auto Trader, Gumtree, Carfind, etc. Yeah, there's also a lot of stock duplication across these platforms. So we're seeing that dealers and sellers at large are kind of multi-homing. We do know from all of our interactions with our dealers that we are not a unique service offering insofar as they will often use multi-platforms and put the same stock on different platforms. And from research available to us, we know that our users will obviously have many platforms open and will look for a specific car, and they're not averse to using multiple platforms in conjunction. So it's kind of fairly commonplace for people to jump around, and we're often competing to bring back the same user or back the same dealer onto our ecosystem that may have been there before as they go around and test the other platforms. And so we talk around value creation and not having contracts, and obviously with our consumers on the front end, we have no contract whatsoever. And so in order for our ecosystem to remain healthy, we obviously have to ensure that that delicate balance is being nurtured, and that we're making sure that our dealers are finding value in the platform and our consumers likewise are finding value in the platform, but also an experience that is superior to the other platforms available. So that really informs how we go about building our business and what our sort of strategies are around retaining users that do visit our platform. So if we look at our platform specifically from the vehicle seller's perspective, and in this case, the dealership, our base package, which we refer to, is our standard package. And this is a package that is, it's our major package, which is used by the majority of dealers on our platform. It's kind of, it previously was your entry point into the Cars.co.za ecosystem. And this base package would allow a dealership a certain number of vehicles. They could, it's more than a certain number of vehicles. It would allow them a certain number of vehicle advertising slots. So obviously in the event that they sell a vehicle, they could place another vehicle into that slot. And that would be just within the ecosystem. So they get their number of slots, they get access to a backend and a number of tools that they can use, as well as an admin panel to upload and update and interact with their vehicles, as well as any leads that are generated. And then obviously the leads that are generated come through the platform and are sent through to them. And this is a paid for service, and it would enable the dealership to interact with the Cars.co.za ecosystem, and as a result of that, the consumer which engages on the front end of the platform. The vehicles which are listed on our platform are controlled by the dealership, but the engagement with our platform from a commercial point of view to buy the slots that they are able to use is done on a monthly basis. And they are charged for that upfront. The fee remains the same each and every month, and it is independent of the kind of leads generated, etc. But it has been worked through a process to find a sort of fair middle point that we think is valuable to all the dealers across the space. So it is possible for a dealer using the platform to get somewhat more or less value based off the stock that they have and the way that they engage with the platform and the consumers at large. It's worth noting as well, we don't enter into any exclusive agreements, and all of our packages are able to be terminated, in short notice with 30 days. The dealership fees that they pay are all standardized and are based on the size of the package, which is basically the number of vehicles that they wish to list, as well as the location of the dealership. Although the difference in location is largely negligible, but I'm sure we'll get into that in the Q&A. Group dealerships, we interact with various dealership groups, and when they bring a number of vehicles and a number of groups to the table, a number of dealerships to the table, we do have slightly different pricing in that regard, and this is largely based off a number of factors. One, bulk volume. Obviously, we want to get more vehicles onto our platform, but secondly, the costs incurred in dealing with a group are severely less than that in dealing with a group of individual dealerships. So essentially, we have the same manpower and the same development costs in dealing with a group as we would deal with an individual dealership. And so as you scale up more and more dealerships into a group, we're able to pass on those cost savings to the group as well. So there are some scale benefits, and we can get into that a little bit later as well. So essentially the dealership will manage their own account. They'll be able to upload and manage their dealership listings in real time, and obviously the leads that we generate will come through in real time as well through various different platforms. The dealership concludes any of their deals offline, although some of them do pass automated feeds to us with their vehicle stocks, and we would then pass those leads back through a different mechanism, and they would then conclude the deals and run the process of CRM through a different platform. But again, we don't have line of sight too much onto the dealership's engagement with the customer after we've connected them. Our dealer partners, and we refer to them as partners, are an extension of our business. And what we see sometimes is that the actual consumer is not necessarily aware that the dealership is not actually Cars.co.za. And so they'll come onto our platform, they'll find a vehicle that they're looking for, and they expect that Cars.co.za is concluding that transaction with them, or that the dealership has somehow related to us. And that's why we have a very, very close partnership with them, where there is a point at which we need to hand over the proverbial baton, and they need to carry that transaction over smoothly. And so we've got a lot of terms and conditions that the dealers need to work with us on in order to ensure that we have a really great rapport and a good service from start through finish with our consumers. We can't have a situation where we generate a lead and a dealer doesn't pick that up and continue to liaise with the consumer. And so we kind of monitor that stuff fairly closely and where we can. And we've got a dealer rating system which we can actually leverage and see how dealers are working with our platform. And this is in line with what I was saying to you earlier about the DNA of our business and not having contracts that are lengthy. Because essentially, if a dealer is not taking care of our customers, we need to be able to have a discussion with them about the value that we're creating for them and or the value that they're creating for us and the consumer in that space. If they aren't using the platform correctly, if they aren't paying, etc., we need to look at those criteria to ensure that we are taking care of our consumer at the end of the day and empowering them to make an informed decision and get the service that they require. So it's commonplace for consumers to come and contact us and explain to us the experience that they've had, and we would obviously then have to pick that up with the dealer. And so we work very, very closely with the dealers because we have a very symbiotic relationship, and their success is our success, and vice versa. And so we do have processes and procedures in place to analyze their performance on our platform and to work with them to address any issues and performance issues and opportunities for improvement. So we have a team of people that work very, very closely with our dealers to consistently enhance the value proposition for them. If we look at some of the other opportunities that exist on our platform for dealers, one of the things that's come up is the premium account. And once a dealership has a base package with Cars.co.za, they're able to augment their sort of sales and their presence on the platform with other products. So premium is one of them. And the premium package essentially just enables a dealership to showcase a little bit more about who they are and why a dealership or why a person should interact with them. So let's say a particular dealer has all of their vehicles serviced before they get sold, or they have a certain number of checks that they do. They have a USP. They want to be able to take that brand equity that they've built in building their own brand and convey it on the website so that this listing can have a little bit more substance and a little bit more of a story behind it. But shy of that, with a slightly bigger presence and a little bit more of information around who the dealership is. Our premium listings do not change the order of our search. And this is important to us because, again, if I come back to the narrative which we have within our business, that the consumer experience is not, I suppose, something we would ever compromise. We believe that if you change the results, it potentially alters the user experience in a way that they aren't able to be in control of what they're seeing. And we believe that with our search function, if our goal is to empower the consumer as well, that by enabling them to sort the search results however they see fit, we don't want to intervene and kind of manipulate that. So pretty sacrosanct from our side that search should be based off a choosing of the consumer, and needs to be I suppose a true and accurate reflection of that. So you will get a slightly bigger listing in your accurately earned space within the search. And obviously your page around your dealership gets augmented a little bit, and you can put a bit more information on that. So the premium listing is something that is available to dealers. There's a fairly small uptake in that across our board. We also have a couple of other ancillary vehicle selling tools. We have car specials. This is largely for new car dealers because it goes to a national audience, and we need them to be able to facilitate multiple transactions. Because of the nature of our website, we don't want people coming in for a special that they can't buy and that's already been sold. So there are a couple of T's and C's just around the size and scale of being able to facilitate those specials. And previously, you had to have a national footprint, which has now been brought down, and we've altered the product to enable it to be geographical and enable some of the smaller dealerships that didn't service, I suppose, consumers nationally to still have an active role there. Banner ads are, again, a branding exercise and the ability for a dealership to get a little bit more real estate on our site and tell their story. We have a number of selling tools. We have a private seller tool whereby any member of the public and often small dealerships will come and leverage this platform, and they buy a vehicle slot to put their car up for a period of time. This doesn't come with all the back-end tools that the platform has, because, I mean, for a private seller, they don't need to be able to compare stock, etc. So it's a fairly simplistic version. And recently we launched a match tool which enables the South African public free of charge to sell their car into our dealer base, or essentially trade it in digitally. And I mean, there are a lot of competitors in this space, your We Buy Cars, your Wheelies, your Get Worths, etc. And so, there's as well as, I suppose, all the big dealer groups and average dealers themselves. And so we want to try and digitize this a little bit and help our dealers to get access to stock that they might not have got of, I guess, people that are looking to trade in their car before they look to buy a new one. So these are just kind of some of the other smaller tools that we have as offerings for our dealer base. If we look at our small package and providing access from a seller's perspective, in 2020 we launched our Flexi package, which is it wasn't essentially a base package. It was a unique tool which enabled a dealership to buy slots on an ad hoc one-by-one base. But the feedback we got from the small dealers was that it was a bit too complicated, and they wanted something that resembled our base package that was just a bit smaller. And it's quite an interesting story because when we started the business as a small player in the space ourselves, we initially had a 10-car package, and there wasn't much uptake in the market as a result of that. And that could have been due to our position in the market. It could have been due to a number of factors, but the dealerships that took that small package inevitably cancelled and didn't find the value in it. And so, as we've grown through the period of time, we never had a small offering purely because we tried and tested it. And I guess recently, when we looked at the market again and we looked at the pockets of the market that we weren't playing in as well as we should have been, there were a lot of smaller dealerships that were saying, like, look, your blue package is just too expensive for us, and we need a smaller package to help us to get off the ground. And we came back to it, and a lot of champions within our team really looking to try and service the dealerships in the area, and we got this one up over the line, and it's now in its second iteration where we've reverted back to a base style package based off the feedback we've got from dealers. but it's it's a work in progress and a fairly small offering at the minute, and not profitable for us at all. But it's gaining some traction in the market, and we're working closely with the dealers in that space to make sure that it facilitates the needs that they have. If we move on to the front end and attracting consumers to the platform, this was probably the strength that Cars.co had in the early days as early adopters into the digital space. We were fairly au fait with some of the marketing tools that were available at that point, and that they were quite new and novel. But they've subsequently become ubiquitous with all the different major players in the space. So, we bring a significant portion of our users into the platform through Google and Facebook, Google being the predominant one, both in paid and organic. And I think, we've done a lot of work to ensure that we are both competitive in these spaces, but that we've also created competitive advantage, and that we've learned how to use the platforms and kind of invest as well as we can in them. And being a small startup coming up in a space where everybody had bigger budgets than us and had bigger brands, we had to be very, very clever, I would say, and very considered in how we spent our advertising rands, because we just didn't have enough of them. And we were able through organic to get a lot of traction, and through our paid media, we've become very efficient in that space. But that is taking the lion's share of our marketing budgets, and the marketing budget is taking the lion's share of our business's revenue. So it's kind of a big space for us, and one that we watch quite closely. We've also got a couple of just to finish up on Google search. It's a very, very competitive space, and in the automotive space, we have so many different people that are competing in the space. I mean, we've got our vertical classified competitors, we've got our horizontal classified competitors, we have the OEMs themselves will have websites, the big dealer groups will have websites and potentially bid. The individual dealers will bid on a geographical level here as well. You've got a lot of these new businesses that are moving in that come with big partners behind them. As they, whether it be banks or car tracking car tracking companies, or kind of some of the new trading type platforms. So it's very, very congested, and obviously has a bidding system, which I'm sure you're very familiar with, that does drive up the budget. And it's an expensive place to play now relative to when we started, and so we're looking at finding other ways to kind of gain traction, and also to go where the consumers are. And so we definitely look at some of the other opportunities that we have now, which are around some of the above the line brand building type offerings that we have available to us from the marketing perspective, as well as social media and other sort of new technologies which are coming into the space. So we use a variety of tools to attract consumers to the platform, and once they come in, we do our best to service them so that we can increase our direct traffic and have a better, more sort of robust offering for them. Sorry. So if we just go into our consumer search, as we've mentioned, we're basically about connecting buyers and sellers. The service is free from a consumer point of view that comes into the platform. And we aim to make the search and ranking as transparent and as kind of intuitive as possible for our consumers, and enable them to make the correct choice for them. So we've got a standard filtering system which would enable a user to essentially isolate the types of vehicles that they're looking for, and this would then enable them to get a subset of search results that is I guess valuable to them, and particular and personalized to them. And then we have a number of different ways of sorting vehicles. The default for us is to either sort by high-low, or to search, by price from low to high. So essentially the cheapest vehicle will be first, and the most expensive vehicle will be last. There is a situation where we go into more recent, as in like the most recent vehicle added will be at the top, depending on how the user comes in. But the vast majority is sorted by cheapest first, and then obviously once the filter is applied, that remains the case with the vehicles that are left in the sort of search criteria. Again, the user can sort by different preferences. They may want to go high, low, or buy something else, and those options are available to them. And once those are applied, the standard ranking system carries through again. So there are no search results in our platform that are able to be manipulated, and no dealers and or sellers can change their change their place within the price rankings or the ranking mechanism of choice. So it's fairly organic. And we find that a large number of our consumers don't actually change the sort of default sorting structure. So, it comes in as sorted by price, low to high. They will alter their filters to get a search subset of results that is pertinent to them. And then they will just scroll through to find the vehicle that they're looking for. And again, just to reiterate, our premium listings would appear in that search result in their rightful place. They'd be a little bit more noticeable, but they can't manipulate the order. And then obviously, when we look at the leads, so a user would then be able to browse the vehicle they want, view it in more detail, and inquire with the dealer. And then that is passed off to the dealer to conclude the transaction. So there's a number of factors that would, I guess, affect how many leads a vehicle would get. Popular makes, for example, pricing, quality of the listing, etc. So it's not a very linear space. It's not like if you're the first listing, you get the most leads. It's pretty much determined by a variety of factors and sort of the user appetite for the vehicles that you have. Cool. And then just sort of in the last few slides, we also assist the consumer in the buying process. So prior to understanding what those filters are that they wish to apply, they may not be sure where they want to start. And we've got a number of different tools which help them to do that. Our news and reviews will give them up-to-date information on the different vehicles, as well as give them a feel for what that vehicle is, what's good about it, etc. And we've got a great team of guys that do that. We have a car comparison tool, which will enable you to list your vehicles side by side and see how they spec up against each other. New car buyer's guide, you give us a bit of information about you, and we would recommend some cars based upon that. We got finance calculators, as we said, that help you with your affordability. And this is one of the big things that we're working on within our business as well now, because we find that a lot of people aren't truly aware of what their affordability is, and that can be a very big problem in this sort of journey, to kind of start looking for cars that you can't actually afford. So just trying to empower South Africans in that space as well. We also a couple of the cooler projects that we did as well from an offline perspective. We have the Cars.co Consumer Awards, which was basically building a very robust system to score vehicles based off actual ownership data, what people are experiencing with the different brands, servicing, etc., and bringing some of that sort of previously private information, I guess, very much to the fore in a manner that people can digest and figure out where they want to be spending their hard-earned rands. And obviously we had a great awards ceremony around that, and included the sort of consumer in that. And we have our sentimental South African heritage collection and brand, where we celebrate classic cars, as well as some of South Africa's unique heritage and history in the car space. And so we're just trying to kind of engage with the audience on a number of different spaces, and to make sure that they're as informed and empowered as possible. And then finally, just within our business as a startup, and maybe not too relevant to this discussion, but part of our DNA as a small business is, we're really close to our team, and we're close to small businesses as well. And we've engaged in just a number of social and eco initiatives, which are very close to our heart. And, we do this to enable our team, our consumers, and our dealers to be part of something a little bit bigger, and to help give back to the communities that we service, and to ensure that we are just trying to leave the world a little better than we found it. And that, in a nutshell, is pretty much Cars.co. I guess in closing, we believe that there's many options available at the moment for both vehicle sellers and vehicle buyers. There's a tendency to multi-home on both sides. We're a business that prides ourselves on consistently enhancing the proposition that we have for our customers, both in terms of consumers looking to buy cars and dealers looking to sell cars, and hold ourselves to the fact that if we can't deliver good value for them, which enhances their operations, that we're very happy for them to go elsewhere and find, I suppose, something that works for them, as opposed to tying them into a space that they don't want to be. And yeah, we don't have anything that does that. And yeah, on a consumer side, we're really looking to empower the consumer to make the best vehicle decision, and we provide them transparent information and other shopping tools to help them to do that. And yeah, that's our goal, to just ensure that we are adding value in this transaction, and yeah, helping to kind of digitize as much of it as we can to ensure that we do that. And yeah, that's our business in, I suppose, a very big nutshell.
Thanks so much, Ross, for that introduction. You can stop sharing your presentation. Cool. I just want to start just by understanding in this cars line, how much has moved mobile and how much has moved app-based. And partly why I'm asking is, we've gone through travel, accommodation, we've gone through a whole lot, e-commerce, and those are almost more frequent purchases, at least. And I didn't remember to ask the property people this, but I thought, let me ask the cars people. It's not a frequent purchase. So does that change how we should be thinking about, at least, how you guys position in cars and what's more important and what's less important?
Sorry, James, just between mobile and app specifically?
Yeah, so I would imagine, let me just give you my thought. I mean, if I'm now hooked on e-commerce, I might end up with the app of my choice, or at least a few apps, because I'm going to engage that, which maybe means Google search becomes less important over time. If it's an infrequent purchase, maybe I'm not loading apps onto my phone and clogging it up, because I'm not looking for cars every week. And Google search then becomes more important because it's an occasion interaction. Yeah, but maybe you can help us, yeah.
Yeah, so James, on that, I think Al can probably give you a lot more insight into the split between mobile and app. But just from the frequency of the purchase, one of the things that we do notice is that it's not a very quick purchase, the process. So, I mean, we may have people that are engaging with us for 6 months plus, looking for vehicles. There is also an aspirational element of this. And so a lot of people come and use our platform quite regularly just to see what's around and to kind of look for a deal that may or may not be there. So even though the purchase itself is very infrequent, the use of a platform like ours is a lot more frequent, I think, than the purchase would sort of suggest. And there is, especially as you move closer and closer to purchase, there is a lot of frequency. You will come back and engage with the platform much more regularly, to see how it goes. We also have situations where, as in any marketplace, it's not like e-commerce where you buy the thing and it arrives. There is limitations on stock. You go to dealerships, they didn't have the stock, they'd already sold it. You've got to come back into the buyer cycle and take a few steps back. So we do have that, I suppose, dynamic playing. But yeah, maybe just to the question on the app versus.
Yeah, so I mean, I think the first thing is that mobile is by far the biggest user base that we have at the moment. Obviously, people would use both desktop and mobile platforms. And mobile probably accounts for, just comparing mobile and desktop in a browser format, mobile accounts for around 70% of our users. And then app usage, I don't have a user number for you offhand, but we probably generate roughly double the number of lead inquiries on a mobile browser versus our app. We also found that the app audience is often pretty engaged. They would be continually, as Ross said, looking for a car, or they just real petrol heads, and they would really be into the buying process and just want to know what stock's available, and sometimes that takes longer to generate a lead.
And then just on that as well, further to that buying process, I mean, with the news, the reviews, the other tools that we have, we often get people that would use our platform, not necessarily in the late stage of a buy, but more so just exploratory, trying to keep up to date. And so your kind of app users and the users that have subscribed to our social media channels are much more engaged and interactive with the brand, as opposed to someone who comes in just to the desktop or the mobile site through a Google search.
But the cycle of buying a holiday on Airbnb is very different to ours. There are a lot of users would come into our platform, conclude the transaction, and they're not really come back until they're interested in buying a car again. Whereas a travel website would consistently engage with the same user. It's a distribution of users, and some would be highly engaged, but I guess the distribution would just be slightly different on our side.
All right, but I think it helps us understand that it's not obviously it's a big purchase, it's not a quick decision either. So there's a period of engagement. So maybe people are still downloading the app because they know they're in a search mode.
Yeah, and also the fact that it's not linear either. So you would have one person inquiring on multiple vehicles, and then potentially, as I said, coming back in if those fall flat. So it's somewhat cyclical in its nature as well.
And also, just sorry, on buying habits, we heard from Carfind that South Africans can buy at a larger distance than maybe the UK market. I just want to understand the level of trust we've achieved online, because I would assume there's still anxiety about just seeing it, the condition, rather than buying. I mean, is your experience that there's a lot of that happening, that sort of people want to survey nationally or regionally rather than just in their town?
Yeah, our experience is that people will search very widely, but not that they will transact very often over a long distance. So that still happens, and if you have trust in the dealer and the car is a low mileage car and you know what you're getting, you may buy it without seeing it and get it shipped to you. But that's, I think is way more common for the user to look nationally for a car, but to actually want to visit the dealership and see the vehicle before making a purchase.
And just on that, it does also change a little bit if it's a new car or a used car. I think a lot of the new cars, we've also started to consider concluding the transaction online without seeing the vehicle, and that's still a big step, even with the new car. So I think the vast majority of people, in my opinion, would be concluding transactions at a dealership and going in and actually seeing the car, meeting the people. And we know this largely from the fact that a lot of our leads have also seemed to go in that direction, where you see a lot of vehicle views which don't translate into leads per se, and then sales concluded at a dealership with a walk-in, but the person potentially knows exactly what they came in there for. And so we struggle sometimes, and I made reference to that in my presentation, to actually understand where the sale originated. But with the amount of people looking at the platforms online, it's very likely and I would say highly common that a lot of people are concluding the transaction at the dealership, and if that, without actually putting a lead through. And if that is the case, as well as the lead structures that we have, I would say that it's probably, in my opinion, not the majority that are buying nationally. I would say the majority is still buying locally, and I think in a Westbank presentation that we went to recently, and I mean they'd probably be better positioned to actually discuss this information, but they were saying that the average person would drive up to 60 kilometers and potentially pass 5 or 6 dealerships that had the same vehicle listed there in order to get it. So you're seeing a kind of ability to travel, but it's not sort of a national travel. It's sort of more within a province or the likes, and they would have way more information on that. But I'm just anecdotally recalling what they said.
No, thank you for that. I just thought we need to understand if there's different products, whether there's a whole different type of engagement that we need to understand. I just want to ask about your sort of startup. So your technical background, then, I assume, what sort of IT or engineering or?
Yeah, both actually. One of each.
All right, and you say it's sort of bootstrap. So presumably you obviously put in more effort maybe than you got out reward in the beginning, but you still you haven't had a major investor, so you've had to run on an overdraft at most or a loan from a family member, but run at a profit. Is that the sort of organic story?
Yeah, I suppose, it had to be. So overdrafts and stuff were commonplace in the early days, although, we managed to get a little bit of traction, and I think our overheads at the start were purely people costs, and we were those costs. So if you factor the business in as a, paid for in sweat, so to speak, we were running technically profitable insofar as we made more money than we spent. And then obviously took all that money and reinvested it into marketing, et cetera, et cetera, et cetera. So the profit line would not have been profitable necessarily, but it would have just been reinvested. But of course, there were no massive salary bills because we worked for free. So that's essentially where we sit now. I mean, the business didn't make any money and didn't really pay us very much, and didn't pay us very much at all for a long period of time. And so, essentially, that's basically the startup story. And a lot of the team that we referred to, the senior guys coming in, our first employee worked for free. He just said he wanted to be part of the journey. And without those kind of stories, you don't get the traction that you need, because I guess you can't just expect people to work for free. So, it was technically profitable, but we wouldn't declare a profit or dividends or the likes.
Yep, and I suppose maybe the garage was also free from some family member, so. And it was a nice garage. I mean, it was fairly clean, and it had a desk and an exercise ball or two in it. So yes, we definitely don't take for granted the kind of I suppose the fact that we had a roof over our heads anyway. We were young, living at home still. That does make a difference, So I just wanted to explore the early days, because it strikes me that, as you said, this was quite new. So I think, as we've heard before, mobile, smartphones, I suppose 2009 is sort of close to when the iPhone was launched, and smartphones just took off, and so things were sort of moving online, and it wasn't necessarily a crowded space at that stage as it is more crowded today. But also, as I would understand from my interactions with Google, search engine optimization was much bigger than search engine marketing in those days. Google, I can't recall exactly what they had in 2010, but they certainly didn't have 4 ads at the top and a whole lot of other content. So it strikes me almost the costs of startup at that stage were a lot lower than they might be today for someone who's wanting to come in. Is that fair?
Yeah, I think unless we had a much more niche offering at this time, we would never have been able to do it in this environment without funding.
I will also state, though, Google is the juggernaut at the moment, and they've done a lot. And we did play in a search engine optimization space, and it certainly wasn't as crowded. I think everything that you've said there is pretty much as I recall it. But there are other platforms that are really offering a similar sort of startup opportunity, and you see a lot of businesses where guys are really good on YouTube, for example, or they're really good in Snapchat or one of these other social media platforms. And back then, I think Google was probably already on the trajectory that it came in with. But I think there were startup opportunities in early adoption for Facebook, or there were startup opportunities. So I don't think you could replicate our story. But I think the concept of being able to find a unique platform where people are moving and migrating towards, and be an early adopter in that space, and be naturally, I suppose, good or talented in that space. And I think when you start looking at, I feel when I look at some of the way the youth interact with social media, I just can't make head nor tail of what they're doing. But there's really effective growth in those sorts of spaces, and then maybe the next sort of wave comes out of other places like that. So it's difficult to say categorically, but I think I would, or maybe we would, struggle to replicate this now is maybe a fair answer.
Yeah, and I suppose it depends whether some of those channels are good for this type of business. Um, you know, certainly I think YouTube and TikTok have spurned many millionaires in different things, and maybe they're really good for other products. And it may change, but yeah, I suppose the point is that Google now is highly monetized, and that just means it's a congested space. I just want to ask, I mean, when you talked about the banks and all of that, I mean, is it because when someone's buying a car or showing an interest to buy a car, it's all the ancillary services that are also interested in that and bidding on the sort of keywords? Is that what's happening now in the sort of auto?
It depends on, I suppose, keywords is such a broad term. I mean, there's all these little niche, call it pillars, if you will, and you have different participants in different spaces. So, I mean, we play in a large cross section. I think, when you look at the banks, they've predominantly played in the finance space, and they generally have great relationships with either the consumer or the dealer, and they don't really play in the sort of transactional space. And we have very good relationships with a number of the banks, and likewise with the insurers. So I wouldn't consider them competitors, but a number of them are starting to look at opening their own sort of marketplace solutions, and then it becomes I suppose a little bit more competitive potentially, but there's nothing that I would consider a direct competitor to us right now. And so yeah, when you talk about the keywords, I think it's very unlikely you'll see a bank bidding on like Hyundai for sale, for example. I think that was an example that came up earlier. But you wouldn't, but you would see them potentially bidding on like finance for car finance or something like that. So I mean, as you dissect that keyword base, your competitive landscape changes quite dramatically.
Yeah, and I think you've answered both. I was thinking just competitive of the keywords, but I suppose, I mean, you'd also mentioned the other. So they're more likely to be on your platform using banner ads to try and, uh, inform the consumer that if you're looking for finance, come to FNB or the like.
Yep.
That's
We definitely have that with banks, financial services in general, and also OEMs. So a lot of the brands will advertise on our site through a banner mechanism as well. But the brands are definitely competitors in a strictly Google space as well.
You mean like the Hyundai itself?
Yeah,
Or
and
bid
I
on
mean,
its name?
it depends on exactly what the term is. So they may bid on a new car term, but not on a used car term. And yeah, I guess this is where Google has become very complex and involved. And you need, it's become more of a data exercise, the bidding on keywords, than it has become a kind of historical marketing type exercise.
The other thing that seemed to have helped with search engine optimization is content. So as I understand, the more content you've got, original content, does also sort of push your website further up the chain on organic search, at least. I mean, was that part of the strategy of going into content, or was it just sort of a consumer information and bringing people back to the site?
So I think both. I mean, we wanted people to come back to our site organically, and then, I mean, organically, not through Google. We wanted them to come directly to our site and view our content. And there are a lot of people, as I said, that are just very engaged with our content and will do that automatically. We also want to rank for the terms that our content is specifically applicable to within the Google organic set of results. And so that is a big driver of users for us into the content section of our site.
The other thing, just to supplement that, which is what was and is the beauty of Google, is that it's essentially the same thing to me. I mean, if you are able to write a piece of content that services the user's need, and the user is going into Google and searching for that, essentially highlighting the need they have, and you're able to rank based off Google's algorithms, which often would I suppose give the stamp of approval that you are the preferred source of information on this particular topic, you're using Google and search engine optimization to isolate the need that the consumer has and then to service it. And so a lot of people in the early days would do content writing purely from a SEO strategic perspective, but a lot of the metrics, and now I'm speaking anecdotally on Google's methodologies, but a lot of the metrics they'll look at is, how engaged are the users once they land on your platform off this particular keyword. And so you have to have the view of delivering value and making the content piece that you have actually help the consumer and empower them in order for you to rank appropriately for those terms. So they are essentially two sides of the same coin, if done, I suppose, at least philosophically correctly.
Yeah, and that was, my understanding from our discussion with Google is the longer you stay on the page that you got sent to, the higher your quality score is. So that would make sense, I suppose. And your content, that's your internal team that does your content. It's not a sort of bring in reviews from whichever other site and highlight them. Is it all your own content?
Yeah, it's all our own content which we create, and obviously we have a network we have an internal team, and then we have a network of I suppose consultants and journalists, etc., that we work with. But we every piece of content on our platform is bespoke for and designed for us and for our sort of platform and our users.
And that was just the other thing I wanted to come back to. It may be an infrequent purchase, and you've obviously got the petrol heads group that will follow this all the time. But, is part of the strategy building a brand and not just relying on Google over time, so that when I come to the point where I've got to purchase a car, I'm thinking cars.coza rather than something else? Does that play a role or not in your experience?
Yeah, that definitely plays a role. And it is one of the things that we're very conscious of as well in terms of where our marketing spend goes. And we've actually tried to allocate more of it locally, just because there are some opportunities as Google gets more and more competitive. The pendulum swings back in favor of some of the more traditional marketing as well. So look, at the end of the day, even in Google, the user is probably more likely to click on the ad of a brand that they are familiar with than one that they're not. And we have to, ultimately remember that we're dealing with people in all of these spaces. And so it's all interconnected. We do build a brand and try and work off that. But the reality of where we play and where we've come from is just that Google is the primary driver of traffic. And that's by virtue of the fact that, a lot of South Africans start their search there. So,
but they also own Chrome browser, and that is a major gatekeeper to people coming through those channels. And so the first thing you do is just to type in a keyword straight into the address bar, even though you could type in the direct name of the site that you want to visit. So I think that we've built just to come back to your original question, I think that we've been very focused on building our brand, as well as trying to bring in new users from these other mediums. Google, I think, just attracts, even if the user was originally going to come to your site, they still come through a Google channel regardless, for a high proportion of those users. So a large percentage of our organic traffic and even our paid traffic, because we're forced to play in this space, are from users who would type cars.coza directly into a Google search. And so, that does skew the numbers slightly.
Yeah, no, maybe just to ask you, what do you feel about, ad always pops up even though you've typed in cars.coza and you pay?
Yeah, I think no one likes paying for traffic that wants to, or for a user that initially wants to come to your site anyway, particularly because you've already paid for the branding elements around that. I guess that's the way that it's set up. And they do provide a lot of technology in the transaction as well, and in the platform. So I mean, we use Google for multiple places in our business, everything from email to marketing to some of the cloud infrastructure that we use. So they're important to our business, but yeah, some of the things do get frustrating at times.
And I think just further to that, I mean, we built a large portion of, or we built our business largely off of our relationship with Google. And, it's difficult they offer a very good service. I mean, that is the reality of kind of these big marketplaces as well. The user goes in and types into Google because it's quick, it's easy, and it gets them the results that they want. And that organic growth that they've managed to create is kind of their value proposition. And just as we are, I guess, always trying to tailor our needs to what our consumers want and what our dealers want. I mean, they've obviously facilitated and created a platform that users wish to engage with, and we play along and have a symbiotic relationship with them, just like we have with our dealers. So, they come through Google into cars.co and they find the page they're looking directly for. And so, yeah, there are frustrating elements about it for sure. And watching the prices go up over the period of time has been frustrating in of itself, but at the same time, we've built a fairly good business with our consumers based off our ability to use Google, and I guess that they've always been a great service for us as well. So it's always bittersweet, I guess, but maybe that's the nature of business.
I guess it's just very hard to know where they're going with their strategy, and it's obviously a huge percentage of Google's revenue comes from PPC. And so yeah, and it's very important to all of the people which you've interviewed. So we'd like to have a little bit more confidence in knowing where the next 5 years goes. But I mean, there are a lot of those dynamics which are up in the air anyway.
And is that from a perspective of vertical search or specialist search?
So sorry, what are you referring to? What is the difference?
Sorry, I maybe presumed too much here, but I mean, some in travel accommodation and shopping, the concern about where Google is going is around, are you coming into my specialist search area? Because you could see them as specialist search, and obviously there's a history there as well. So when you said, Al, that where then they're going in the next 5 years, is it just the monetization around pay-per-click, or is it coming into your space?
Both. So we've definitely seen on our bids to buy keywords or to buy the ad slots in the search have changed fairly dramatically, as we've already said, over the last 10 years. But I mean, Google consistently tests these new products in the search space. And so would a platform like Facebook. I mean, they would, I think, happily and already are sort of somewhat into the marketplace. The service is slightly different, but they're trying to expand their business, and rightfully so. It just would affect us fairly significantly if they took certain actions.
I mean, an interesting response we got in the property side, and it was in relation to a question around Gumtree, but and you alluded earlier, Ross, that Gumtree's a horizontal, but I think the person said basically, the specialist engine, the vertical, delivers how the consumer wants to engage, I suppose, that type of search, whether it's for a house in their instance. So it's almost designed around it, much like you might have your design around, my criteria I want to plug in, how it wants to be viewed. You, I assume, put a lot of effort into that user experience and understanding that. So is that what sort of separates, a specialist or vertical search engine versus the horizontal or others?
Yeah, I think so. I mean, the reality is that when you're trying to service multiple different search criteria, even just within our own platform, the difference between new and used, etc., it's very nuanced, and understanding, giving the user the exact levers where to pull and putting them in a space that's intuitive for them is quite it's an art, and when you look at a horizontal, they've got a lot of different things that they need to facilitate, and so it's much trickier than to actually customize or personalize that journey for the user. And I think we talk about generating value, we talk about enhancing the experience, etc. And so that's one of the, I guess, the USPs that a vertical like ours would have, is that we are very specialized in and around cars, and so everything is designed. I mean, the size of an image, for example, is best designed to showcase a vehicle. Might not be the best dimensions to showcase a surfboard, for example. And so, you kind of have to take shortcuts to get, everything to fit into the same platform. But at the same time, you also get the scale, and you're able to bring a user into a much bigger ecosystem that potentially works for them. And so you get pros and cons, and that's probably why they both still exist. And I think likewise, when you start looking at the potential disintermediation from places like Facebook and Google, I mean, they have a lot of familiarity with their platforms, but maybe less familiarity with in our case, sort of the automotive industry, and what the dealers and what kind of the sort of big groups and the banks and the OEMs actually want as well. And so we have got, I suppose, USPs that we try and leverage in all of these spaces, because we're trying to create an experience that works for a particular region, and there are nuances in that space. And so definitely verticals have got certain USPs and horizontals others, but they definitely are different in nature.
And sorry, USP is unique selling point, I'm assuming.
Sure.
And again, I'm just going to compare to another category, but you've mentioned, I think, a few times about a niche. And it was interesting when we did travel accommodation, some of the South African platforms, in talking about competing with global giants like Booking.com, they said, well, I could start with a niche on a long tail of search, so I could bid on, weekend trips to Dar or something, and slowly build. I mean, are there niches in cars that you've seen, or niche players that have emerged, and what sort of niche? I'm just trying to think in cars what that could be.
But I think there are smaller niche offerings in things like a rent-to-own model, or yeah.
Well, I mean, you see it. I think. I mean, it's not really even smaller. I mean, your niche around sort of the your We Buy Cars, your Wheelie, Getworth, etc., who now have essentially a trade-in tech platform where they can come through and they can buy your car from you, and essentially you can trade it in without the old school methodology back in the day was you trade in your car on a new car that you're buying. The transactions are linked, and they've decoupled that and created almost like a selling platform, which was very niche, versus and then they have all that stock, which they now largely service back into the dealer network as well as sell privately. And I'm sure you can chat to them about the nuances of their business model, but those kind of niches are definitely coming in, where previously your dealership would be the point of sale for selling your car and buying the next one. And now you're kind of seeing a whole bunch of other new players coming in and kind of just breaking things up slightly differently. So there are some of those in place. I mean, when you look at the likes of a Booking.com, I mean, the sort of tech infrastructure that they bring, similarly to Uber, is just it's incredible, and it's very difficult to compete with that. So you start to see other opportunities locally, but yeah, the big tech giants do definitely have some advantages as well, which are somewhat daunting. But I guess one of the things we have is, coming from a small startup in a very, very established industry, we kind of never had opportunity to rest on our laurels, so we don't do that now.
And are there the sort of Booking.coms of the world in the auto space, global, multi-regional players?
Yeah, so I mean, your biggest one would be probably historically Auto Trader, but they've been decoupled. So it's kind of been, and I'm sure they can speak more to that. Australia has got like carsales.com.au, which has moved into other territories, but hasn't really come here. There probably are big players in the US as well. And I know that there's some big marketplaces like eBay. I think it's eBay vehicles or Gumtree vehicles, etc., that have come up. But there's no one consolidated place that seems to have like a a global footprint. And so it seems to be very much territory based at this point. And yeah, so I'm sure there are, and they're just not as sort of global at this point. And yeah, off the top of my head, those are the only ones I can think of.
But
Yeah,
definitely, companies would operate internationally, and their tech would be shared, as far as I'm aware.
Sorry, I missed that, Alistair. Who?
I was saying a Gumtree, I mean, they're a horizontal, but a lot of their effort would be global.
Yeah, and I think we understood from Expedia even, maybe the reason they could expand is on the back of actual travelers. That meant you were forced to go and locate in their destination markets, and that got you set up there, which meant you could sort of look for local travel as well. And so there maybe is a unique story there. I just want to go to the ranking and as you indicated in your presentation, I think your default most of the time is cheapest to most expensive. And in your experience, I mean, how often is that changed? Or do people change it a lot?
Our experience is that it isn't changed very frequently. It's a little bit hard to aggregate those numbers, because if someone lands on a page and the sort is automatically set, even them landing on that page is counted as them having sorted the page. And then you've got to try and decouple those stats. So it's hard to give an actual answer, but our experience is that most people leave the sort filter the same as it was originally.
But your more sophisticated user, and this is just an anecdotal feel from kind of experience and sort of I guess some research that we've done, maybe more verbally. The more experienced user will be using those tools a lot more than kind of a sort of inexperienced web user.
So I mean, they're still highly used, but the vast majority of searches don't have a change in search filter sort.
And is that partly why you make it the default? Just because that's what consumers tend to like?
There are arguments for using other filters. And so we also, as we said, use the most recent filter for some of the landing pages that we have on our site. And that's just because someone is likely to have been there before. We think that they want to see the more recent cars that were loaded. But yeah, we at least in our experience, think that people want the logical order of viewing a car from cheapest to most expensive, or in some cases from most expensive to cheapest as well. That is a highly used sort.
Yeah, we just think it needs to be something that's understood and that's intuitive. And price high low or price low high, I mean, it's pretty simple. You can see the numbers are descending or ascending. If you landed with a McLaren or Ferrari at the top, you're at the high price point, and it's intuitive, and you can see that. Whereas I think if it's more convoluted, it's just difficult for the user to understand. But after the applying the factor or the filter our side that it needs to be intuitive, thereafter it's a coin flip, really.
Yeah, because again, just comparing across platforms, I mean, we see in some of the others there's relevance. And that's largely, I think, often using your history as an individual. Either you've signed in or they recognize you. So it may be that when I previously looked for weekends away, I looked at certain categories, and so more of that comes up front. I mean, just understanding for the infrequent, I mean, do you have much of that history at all? That you could sort of incorporate that? You did mention that if they've come back, you put most recent, but...
So no, it depends on how on what type of page they land and what type of search page they land on. But if someone has previously searched on our site, and yeah, it may be slightly inconsistent due to sort of technical rollouts recently on our platform, but we try to keep them on the same sort that they were on previously, and that's just saved in the browser and then reused.
But I think in other verticals, one of the things, and I can't speak on their behalf, but one of the things that I can see is that because the transaction is completed on the vertical, you often would have an account and you'd have some kind of a history and you'd be able to store that. Whereas because we don't have that sort of implementation at the moment, you're always technically an anonymous user to us. And it's really difficult we have got certain things, as we say, like when we do remarketing, etc., it's possible to sort of, identify that it's the same browser coming back, for example, but it's a lot trickier to give you a personalized experience based off relevance. And I think in some circumstances that probably does make sense, and it would be something we'd definitely consider and have considered. But for the vast majority of our sites at the minute, and also given the fact that, as you say, the infrequency of the purchase, we believe with the filters you can determine exactly what you want, and that we just sort it according to, as I said, a logical and intuitive nature, and you can get through to page 3, 4, 5, 6, 7 and go through the things as you want. So I guess, as I say, in these situations, there's probably an argument for almost any, application that is just ours in terms of keeping it familiar and intuitive and consistent.
Yeah, and I suppose all my thought was that in this context, maybe pay for position is more of a blunt instrument. There's no nuance around relevance anymore. I've searched for my, Toyota Hilux, and then when you do have a sort of pay for position, it may be just, I suppose, a blunt instrument, not a boosted relevance instrument.
Yeah. Look, and there definitely are tools, and I think what we're seeing globally is just that personalization of advertising as well, to try and get you to the place that you want to be as quickly as possible. And at least philosophically, the relevance, if done properly, is probably a very valuable tool, as opposed to just paying for, I guess, to push something that a seller wants to push to you.
And you've not done that, but my question to you is, surely you could, if you wanted to. We saw earlier that another platform has done exactly that. So you could monetize your platform a little more, but you've chosen not to.
I think, look, our view on this is, especially if you look at it from a long-term view, you will pay somewhere along the lines for those sorts of things. And if we, as I said, we hold our user experience as a very, very key component of our business and how we've built that, both from a dealer perspective and a user perspective. And if you consistently give the users a great experience, again, we talked about the branding, etc., the likelihood that they're going to come and engage, even if they are multi-homing, if they're going to start their engagement on your platform because it's a more succinct and more kind of intuitive and more enjoyable experience, you get first bite of the cherry in terms of working with that consumer and building a brand and a lasting relationship. Sometimes you can, at least we believe, you can go for short-term monetization and potentially tarnish the user experience or the dealer experience in such a way that they potentially don't want to engage with you again. And not to say that's what's being done. I don't understand the nuances of the other businesses, and we focus very much on our own business and the likes, and that is our logic for doing it, in terms of saying, the long-term user experience is the most important thing on our platform. And when we don't philosophically agree with something which may or may not impact on that, we just don't go down that road.
All right, but it's not a requirement to be profitable in this sort of business, because you presumably are profitable.
Yeah, no, we are happy with our profitability. And as Ross said, I think that not selling some of those features sometimes has benefits of its own.
Yeah, so you may save on marketing costs because people are coming to your platform organically because the experience is there. We also have a really, really good relationships with our dealers because all of our costs are transparent, and there's no way for somebody, I think there's always that opportunity where you've got to sell to one dealer and then another dealer, and you want to be able to, engage with them both on equal terms. And for us, if we have a standard sort of suite of products that enables them all to compete as well, then that works for us, and we potentially have greater traction within the dealer space as a result of that. So it's sometimes more about just looking at the ecosystems instead of the individuals. And so I think, yes, we maybe shoot ourselves in the foot in terms of short-term levers to create monetization, but I think in the long term it potentially is one of the opportunities that we have used to scale our business.
And I mean, that's not to say that we will never consider it. We have in the past, and we've chosen not to go down that route. And it's also not to say that it can't be done elegantly and to the advantage of the user. I think it can if it's implemented well.
I mean, just on the multi-homing that you mentioned, I mean, the impression I've got, and you can correct me if I'm wrong, is people may still have their favorite site. And part of what you're doing is going to see whether they've got all the stock or you're missing out on something. But you may have your preferred site for engagement, and that may drive some of the sort of multi-homing in that respect. I mean, what's your experience?
Yeah, that is our impression. I mean, essentially, if you look at our story, we came up as a startup, we always had less stock. So anyone who started their journey on our platform, even if they enjoyed the experience, would still end up on one of the other sites if they didn't find the car that they were looking for. Because, stock is a very, very important metric. And even though there is a overlap in stock, we do know that most of the competitors in the space will have a certain element of stock that is unique to them. And when you're looking for a car in particular, you want to, especially the users that are coming to leverage our platform, to ensure that they have choice. It's worthwhile for them to go and look at some of the others to ensure that they haven't missed something at the very least, or if there's an opportunity for them. So what we do find is that you would have a preferred platform generally, or you would come into a platform which you have been served an ad through Google or the likes to land on. And then thereafter, we'll go and look at other platforms to sense check or to find new kind of opportunities, and you get exposed to them, which again also keeps us all honest, because in some way, shape or form, you are being directly compared to your competitors by, if not all the users, a decent percentage of them.
And I just want to go to the sort of pricing stuff. I'm sure you've heard us with Auto Trader, but because you mentioned that you also compare Gauteng to the rest of South Africa, and it was a curiosity for us. But as I understand, your difference is a few percentage difference. It's not a large difference.
3%, I think.
And what is the reason for you doing that?
So initially, all our pricing across the entire ecosystem was uniform. There was never a difference regionally. But as we start to engage more and more with the dealers, what we were looking at was the leads generated. We were looking at sort of the costs incurred, and we were trying to unpack how much value we were creating in the different pockets. I mean, Gauteng is a much more expensive place at the moment and much more competitive for us to generate leads. You're seeing a lot more competition. And what's interesting in the space is that you often get a lot of localized competition in your big hubs, which doesn't exist in other spaces as well. So we started doing the maths a couple of years ago and realizing that Gauteng was a little bit more pricey and a little bit more competitive for us than some of the other spaces. But we haven't been giving particularly big price increases over the last few years, as we've established sort of a baseline that we're happy with. And so, yeah, we slowly deviated them based off the fact that the guys, I guess, frankly, were telling us in sort of some of the smaller outlying regions that they just couldn't afford to pay much more. And the guys in Gauteng largely were, a little bit more robust and making a little bit more off the platform, but also the nature of generating leads into the big hubs is a little bit more competitive for us as well. So we deviated slightly, but it came off of a sort of decade of history of everything being exactly the same. So there's a slight tweak, and that tweak was a little bit more magnified if you look at the size of the price increase which was given at the time, but over the actual price point, it's very, very small.
So if I understand it, I mean, in part that if I type in Hyundai, Gauteng, whatever, I-10, in bidding for that ad word, you might pay a little more because there's more competitors vying for Gauteng.
On aggregate, yes. I mean, on a specific term, it can be very random.
All right, and but it's 3%, not the sort of 20 to 40% we saw earlier.
So I mean, 3% may not be representative of the actual skew in cost on our side. It may be a little bit more than that, but that was at least moving the price structure. But no, I don't think you'd ever see that sort of differential between the two, the Gauteng prices and then outside of Gauteng.
And then in your base package, you've got a sort of 40 car, 100 car, 150, as I understand it, and then you got top ups. And I mean, there is obviously a price difference per vehicle if we went to the top of each category. But as I understand, it's maybe about, I don't know, about 40% higher or cheaper for the best package compared to the worst package, or the smallest package versus the largest. Is that about right?
Yeah, if you exclude the new sort of very small package that we brought into the market.
Yeah, so I'll come to that because I'm interested in that. And well, but let me not preempt that. And groups get a discount as well, as I understand. So you would then, as I understood your presentation, if it's a group, then they would get an additional discount on that.
That's right.
And the kind of range for that?
Yeah, I'm not sure whether we come into the confidentiality side of things at this point. We're happy to share those numbers with you, obviously, and I think that they're not orders of magnitude smaller the pricing that would be sold onto a group, but cheaper than our largest package.
Yeah, and I would assume that to be the case because you're discounting off the largest package of their big group. I mean, look, you heard our discussion, no doubt, about the differentiation. I think it does concern us that part of our mandate is looking at participation and how do we, not just bring in small businesses, but also transform the industry. And certainly, broader work the Commission has been doing shows that small businesses are really a fraction of this economy, and we're highly concentrated. So I think this is going to obviously come under the microscope a bit, but I mean, just to get a sense from your history, has it always been this sort of case, or has it changed over time?
So
I think we've actually brought the pricing a lot closer. When we started as a business, it was incredibly important, and it was a huge lever for us to get a group on that could offer us 3,000 vehicles in addition to what we currently had listed on the site. And so we had to make it very attractive for them to come on board. And as time has progressed, I think we've given out our price increases in a way in which has brought that differential that you're talking about significantly down.
Just by way of example, and talking more into the transparent side of our business, I mean, in our last price increases, the percentage given to sort of the larger packages was greater than the percentage given to the smaller packages. And the percentage given to the Gauteng sort of larger dealers was different to the coastal, as we've discussed already, hence the 3% differential. So your biggest price increases went into the bigger dealerships because we could see that there was, and potentially still is, a slight skew in terms of that. But we work, and we have worked aggressively to try and bring that more and more into line. And, when we talk about the order of magnitudes of the groups, I mean, if you look at the price per vehicle, and I'm sure you guys have done the maths, the group dealers are getting sort of less than I don't know off the number offhand, but potentially, correct me if I'm wrong here, Megan, less than a 20% discount. So it's the orders of magnitude are closing, and we really are trying to work to ensure that the value given across the board is at the very least the same. So we do afford, as I said in my initial presentation, we're afforded some cost optimization in the groups, but yeah, we don't foresee that the group should be paying less than a smaller dealership, just on kind of a level playing field. So where the cost optimizations are there, we do want to, and we can pass those back, but we do work to try and bring it closer in line, and potentially you may make some recommendations, and we'll listen to those if we haven't done enough, but it is definitely our mandate to kind of make it transparent and I suppose equal for everyone to compete on our platform.
Yeah, because I think what Alistair said there maybe makes sense, that when you're starting out, they've obviously got a lot of pull, and it may be legacy because of that. But now these are kind of established marketing channels. I get the sense that it's not really required. I mean, that was my discussion with Auto Trader, that if there's value in the channel and it's selling, they're going to come anyway, so they don't need to be given as much preference.
The groups also do bring a lot of interesting, I guess, nuances insofar as they generally have more robust systems. They have a lot of differentiating factors than sort of a small dealership would have, and so the ability to pull reporting, etc., on a one-off basis, and to have one person servicing a number of groups, etc. So the cost of providing the service is kind of the same for a small dealership as it would be for a group, essentially. And so there are those things that we have to look at, especially with our people, and obviously we work with the small dealerships to give them, I guess, value, but also to give them sort of information and data, and to enhance the product. And dev costs are a real thing for us at this point. So the bigger established channels that we have are, as you say, they started off small, and we started off taking a very big bath to bring the groups on board, because they just had so much negotiating power, which we were probably didn't have the negotiating power, but we were probably a bit, frankly, just wet behind the ears, and we didn't know how to negotiate back then. And we've worked really hard to correct those. I mean, the biggest corrections that we've had in our business over the last sort of decade have been in the group and in the bigger spaces, because we have a good communication with them, good reporting tools, and they can see the value that we're providing. So yeah, we are working towards that, and we are working to correct it. But I think it is worth noting that we have done a lot of that legwork already.
And even in terms of a billing relationship, we would bill a group once for 100 dealers, whereas with individual dealers, we would have to go after all 100 of those dealers in terms of invoicing and following up, and there are real costs to those things. I do understand the perspective that we need to make an allowance for smaller dealerships to have an equal footing and equal access to these tools. There is just a real administrative cost to us dealing with dealers on an individual basis.
Yeah, and I think, on the cost side, I mean, the impression I get anyway is there's negotiation, and that happens, and we can rationalize on costs, but it's probably not going to really mean the kind of difference, because I mean, a group also expects a degree of customer service, a dedicated accounts manager, so there's probably cost differences I wouldn't expect to be as massive, but tell me if
obviously things like marketing expense on our side would be similar, and those are large percentages. But from a manpower perspective, there is a real difference in the number of man hours that we need to give to servicing a group versus to servicing 100 dealers, for example, which would be the same number of dealers that come on through a big group.
And just on that, James, we actually have a dedicated account manager for every customer that we have, as well as dealers in the space. So a small group is still afforded and given a dedicated account manager who comes and visits them as regularly and who works with them on their platform, who gives them the same reporting, etc. Because we initially started with more of a self-service tool, and that didn't really work. It felt like the groups, not the groups, the smaller dealers also wanted the interactions with our business. And so, the fact that we have one dedicated area manager or sort of group manager who services all of our groups, and we have one dedicated, I suppose, dealership rep per sort of area, but he services all of those guys as frequently, they should get, near as makes no difference, the same service. So that's what we refer to as the costs, in that they do have access to us from a training perspective, from an insights perspective, from a reporting perspective. But yeah, we're always looking at this, and as we said, we've put a bit into our small product, and we have evolved that as well. And I don't profess to say that we've got it completely right here. So I guess we'll keep looking at it and aspire to move it in the right direction.
And just mentioning then, you mentioned the Flexi package. I mean, I just want to understand the story behind introducing this. You must have, I think you said when you were giving the presentation, you initially had a 10-car package. There wasn't really take up, but recently you've kind of gone back and looked at where are there pockets that you're not servicing as a platform, and the result was this package. So can I just understand, because I also asked Mr. Minnie from Auto Trader, what is this landscape? So when you went out to look at who's out there in these small dealerships, and this is I think it's 5 cars, and you can boost it from there as a package. I mean, what was your assessment of who's lying out there wasn't really being serviced by the online platforms?
Our feeling, and some of this was supported by the fact that these very small dealers were using our private advertising service to advertise their cars and generate leads, but that there's a very long tail of small dealers, and it's very difficult to count how many dealers there are in that space, and they may not even fully classify themselves as a dealer or as a business that maybe run privately out of their back garden. And so I think George had the same comment on his side, that to accurately assess how many of those types of dealers there are is very difficult. But we saw the demand in our private seller space, and we do know of a lot of dealers who were buying our smallest package at that point, but we're requesting something even smaller because it was hard for them to afford the rate that we were charging, particularly when they were only advertising a fraction of the vehicles that were falling into their package. So, but I think we only have around 50 of those Flexi dealers live at the moment. That fluctuates fairly rapidly, and there is a bit of churn in that market as well. It's not nearly as stable as the more established dealer market, but we do think that there's a lot of room to grow into that space.
And sorry, just to supplement that, James, with the I said we have a dedicated account manager for every one of our customers. So we will get feedback from our team that, look, guys they're paying for this 40-car package, but they want something smaller. They want it to be cheaper. They want less vehicles, as well as guys that won't sign on because they're going to visit them and saying, like, you don't have a package that services me. And so the question is, well, what would you like? And so working with our team that's on the ground. This is kind of what they came back to us with, and as I said, we started with a pay-as-you-go type model, and the feedback came back that they don't want it was a bit too complicated in some ways. It didn't service what they needed exactly, and so we ended up with the package, which enabled them to have 5 vehicles, and then hopefully to grow from there as they need. But there was a lot of on-the-ground sort of feedback that led to it coming at this time.
Yeah, and I'm interested in that sort of feedback from your salespeople as to who's out there as well, and what their needs are, because I think this is an area we have to make a finding, and so it would be useful to know what is the best way of approaching this, I think, in terms of bringing on. And has this brought on more historically disadvantaged dealerships, smaller dealerships?
We don't have direct line of sight on the status there. My gut feeling and sort of anecdotally, it would be yes. But I don't have an exact number for you when we look at those 50 dealerships that we brought on. What I can tell you is that they can afford this package where they previously couldn't afford the other package, or it is way more affordable to them than the previous package that they took up. There are also a number of historically disadvantaged companies who use our bigger packages as well. And so they don't just obviously fit into this Flexi category.
Yeah, I mean, there probably are. I suppose observation as I put to Mr. Minnie was, we're sort of active in this area around service, repair, maintenance, the right to repair, and it seems obviously historic advantage about being set up in wealthier areas has sort of perpetuated, and it's one of the areas where I suppose the practices of dealing with the established businesses just creates another barrier, which makes it quite tough to transform the industry. I don't know if your experience of dealing with this industry over the last 10 years gives a sense of it's different to that.
I mean, you talk about wealthy areas, but there are a number of dealerships in a wide variety of areas and geographies, and we deal with them across the board. Sorry, I don't know if I missed your question there, James.
No, you're right. Sorry, I just wanted to check with Ms. Tsepe whether there were questions from her. I just want to check with the technical team. All right. Well, look, Ross and Alistair, thank you very much for your participation today. I appreciate you making the time. I think we certainly learned a lot, and it was interesting just to understand how the market is changing as well. So thank you for your time. Thank you for the time that your team has put in responding to all our requests for information. I know they can seem burdensome, especially to a smaller organization. And we'll continue to have engagements. I mean, we can have a sort of in-camera sessions if you want. Those are not going to necessarily be compulsory unless we have something specific we want to ask. But I mean, there may be some follow-ups around it. But I would appreciate if the industry gives thought to the sort of pricing. I mean, I think as I've indicated over the last few days, the market inquiry is about a market feature, not necessarily an individual firm, and we recognize sometimes that to force one firm to move may put it at a disadvantage against others. So it's often about a market coming up with a solution as well. But thank you so much for your time, and yeah.
Thank you so much. And I mean, we do agree that this is an important part of transforming the industry and of creating new opportunities for particularly smaller dealerships within South Africa. And as you can see, we're already engaged in doing that, and we'd love to hear your feedback on how we could do that better too. Thank you for the chance to be part of this.
Yeah, thank you, James, and thank you to the whole Competition Commission team. It's been a lot of information. I won't say we enjoyed it immensely, but it's definitely been educatory, and we appreciate that. Thanks so much for having us.
All right, thanks, guys. Just for the general public's benefit, tomorrow we've got Sandown Motor Holdings, who are coming as a client of the auto portals, and that, I think, largely closes off the auto side of things. And then the other participant tomorrow morning is Bolt Foods, who couldn't make it at the same time as the other the other food delivery platforms. And then in the afternoon, we're going back to travel and accommodation. We've got Avis and Sabrala in terms of car rental. We've got eDreams, which is a flight portal, a global one, and then Intercape to give us a perspective for bus transport. So that's tomorrow's proceedings, and we'll start at 10 again tomorrow. Thank you. Thank you very much, and thanks to the Cars.coza team.
Cool.
Thanks.
Cheers. Thank you.